Well, welcome everybody. Steven Sitkowski here. Glad to have you for this edition of my Market Insights. Let's take a look at what's going on. It is September the 15th. Hope you had a great weekend. Ours was pretty awesome. I taught a 2-day class Friday and Saturday, and yesterday just caught up with some folks. Really good day. Hope your weekend was as successful. Quick reminder that everything that we do here is for educational and informational purposes only, not intended as investment advice. These are just my observations. So, what's moving the market? Alphabet, formerly known as Google, becomes the fourth company to reach the $3 trillion mark. So, they join NVIDIA, Apple, and Microsoft. It's amazing. I remember when a company's valuation hit $1 billion, it was a big deal. And then $100 billion, oh, it was a huge deal. Now we have companies over $1 trillion. That's a gross national product of just a handful of countries in the world. Pretty amazing. We have our Fed announcement coming out this week on the 17th, where the Fed will let us know that they're going to be cutting interest rates. Right now, it's forecasted that that'll be a 25 basis point or a quarter point cut. There are some people out there that are whispering it might be 0.5%. I don't see it. Not with inflation where it is. If we would have gotten a really good low CPI number last week, there was a shot at a 50 basis point cut, but I don't see it. And I think the market would look at it as desperate. I think we are best served with a 25 basis point cut all around for the economy and for the market. Let's go gradual. Stocks rise on China trade talks. So the White House announced that those trade talks are progressing, that they're making traction. We'll see. I hope that's accurate. 10-year Treasury is almost down to 4%, 4.034. That's really attractive number for equities. And oil prices, they haven't been doing much for a while. We're at 63.28 a barrel. Market breadth last week, pretty solid. We look at advancers versus decliners on the New York Stock Exchange. 1586 stocks moving up, 1238 moving down. More importantly, 360 stocks hit new highs compared to 71 that hit new lows. We look at the NASDAQ, even more impressive. 2848 up, 2003 down. The number new 52-week highs, 755, 214 new lows. So clearly the market is and has been bullish in spite of certain economic headwinds. You always got to go with the score, speaking of which. So here's where we're at, for the week and for the year. So the S&P 500 is up 11.9% year to date. If you want to know how well your strategies are performing, look at your rate of return. If it's above 12%, great, they're working. Less than 12%, it's because you're not taking advantage of the kinds of things we're talking about here on a weekly basis. It means you're underperforming. NASDAQ is up about 15%. So, been a pretty good year. We dealt with Liberation Day and the tariffs and the negative impact that had on the market. Markets were down 15 to 20%. Now they're up 10 to 15%. A lot of resiliency. So these were the big winners. Oracle, Larry Ellison, it's tough when you're a billionaire and then the value of your stock goes up 38% for the week. And then, at least temporarily, you become the richest person on the planet. I had the great pleasure of staying on his island, the island of Lanai, which is mostly desert, but they've created a couple of idyllic spots for two different four-season hotels. It's just remarkable. Uh, so they were up big, Warner Brothers, Discovery, up big, Micron Technology, Broadcom, Lam Research, Centene, United Health Groups. When that stock was way down and I felt like all the bad news was out of it, I bought a call option on it. And I considered a fairly speculative play, but that's up 148%, I think, as of this morning. Vista up 11%, Molina Healthcare up 10%, KLA up almost 10%. Consumer sentiment is falling. People aren't feeling good about things. So they see the stock market hitting an all-time high, but they also see unemployment numbers starting to rise, and they're getting choked with higher prices that we've not been able to fully rein in. And look at the index of consumer sentiment. So it's gone from in September of 24, 70.1, and we had August 58.2, and then September of this year, 55.4. So we're off year over year 21%. People are feeling 21% less confident than at this time last year. Now, the September effect, so I mean, we're rooting for the market to go higher in September. It usually does not. But when it does, the markets for the fourth quarter go up on average almost 4.5%. Annualized, it's an 18% return for the year. So, what are we watching this week? Let's take a look. So, this is our economic calendar. Today, we got the Empire State, that's New York Manufacturing Survey. It sucked. Supposed to come in at 4.5, down from 11.9. Came in at minus 8.7. Yikes. U.S. retail sales are forecasted to fall from the previous month, 0.5 down to 0.3. Retail sales minus autos only down 0.1%. Home builder confidence ticking up. Housing starts and permits. Housing starts down a little bit, permits up a bit. I would expect that with interest rates moving down. And then on Wednesday, we've got the Fed announcement and the press conference. So the announcement is perfunctory. The press conference is a big deal. How does Powell couch this rate cut? Is it the first of many to come? Is it, hey, we're going to do this and wait and see? Markets are going to respond very differently depending on whatever that news happens to be. Initial jobless claims last week were awful, 263,000. They're expecting it to be 243,000 this Thursday. Let's hope they're right. Philly manufacturing survey is forecasted to be higher. Interesting. You would think that would sort of correlate with New York. U.S. leading economic indicators once again forecasted to be negative, and then we've really got nothing going on Friday. So it's all about the Fed and employment data. Last week's heat map, let's see what was shaking and grooving. Tesla had an incredible week, up 21%. So this is from when I'm recording for the last 5 trading days. Oracle we talked about, up 27%, Palantir 7.5%, Broadcom 4.25%, Microsoft up 3%, Nvidia up 5%, JP Morgan up 5%. There's Alphabet up 6.2. Morgan Stanley, nice week. Goldman Sachs, nice week. You can see more green than red. We did have some pretty big losers. I mean, Boeing was off 6%. Netflix was down 4%, but otherwise nothing too remarkable there. Market sentiment continues to fall. So they ask a group of independent investors over the next 6 months, are you more bullish, bearish, or neutral? And look what we got. 28% bullish, almost 50% bearish. There's definitely some fear out there. No question. In spite of markets sitting at all-time highs. Maybe the independent investor knows something Wall Street doesn't know. So these are earnings announcements this week, really light schedule. Be interesting to see what Cracker Barrel has to say. I don't follow the news, but I do follow the financial news, and I don't know what the deal was with Cracker Barrel and their logo and why everybody gives a damn about what their logo looks like or what they were or weren't trying to do, but their market valuation came down about 100 million bucks, and then all of a sudden, they walked back what they were planning on doing, and I guess it's business as usual. It'll just be interesting to see what their comments are. I think the one that has a chance to move the markets is FedEx. FedEx, if you think about it, is sort of a proxy for the economy. When business is good, people are shipping a bunch of stuff and vice versa. So I'll be interested in that one for sure. Let's take a look at the charts. I want to look at the S&P 500. If you're new to investing, the S&P is a index of 500 large cap companies. And I mean, that chart is a thing of beauty. That is a Da Vinci. It's a Michelangelo. It doesn't get any better than this. I like the slow, steady climb, right? I don't like parabolic rises. Those are never sustainable. I like the slope on the 50-day moving average. I like the distance above the 50-day moving average. Right now, everything on the chart looks fantastic, even though investor sentiment is so negative. So that's the S&P. I would suspect that the Qs, this is the NASDAQ 100 Trust, the 100 largest companies traded on the NASDAQ with a real emphasis on technology. Another great looking chart. Look at how it obeys that 50-day moving average. So right now, you got to be bullish at this point. That's what the evidence suggests. So there you have it. All good. Hope you have a fantastic rest of the week. And I'll come back to you next week, let you know what the Fed decided to do, and more importantly, what they had to say. So until then, be safe, be blessed, and bye for now.